All right, guys, welcome back. So in this one, I'm going to cover the playbook. So this is going to be pretty much one of, if not the most important task that we do. And it's really important that we do it right and we actually nail it because, again, utilizing everything from SMB Capital, how they actually train some of the best traders in the world, the playbook is the foundation. So we want to start with that, nail it, and then that literally will determine how much we can push the boat, how much we can risk going forward. So I'm going to jump in and show you a couple of examples. So initially, starting like this style and then going into the more deep and detailed. So with the playbook, again, we can see here a trader's job is to build their playbook. So before we're placing any risk in the live markets, we should have a very, very strong playbook already. We should already know what our setup looks like, what it looks like beforehand, anticipating it, and then knowing which grade is it, A through D. So eventually we want to be answering who is trapped, what geometry set this up, where should I have gotten in and out, where could I have added size, all questions like this, like super detailed questions. But before we get to that, we want to initially carve out what is our setup. So the way that I do it is I find a piece or a section of the market, an area of the market, a particular move, and I will just take screenshots from that. So I literally find, let's say, the high of the month, for example, or a EMA cross, a large pump that left a gap, a all-in move with little heat on it. Any of these conditions, and I will just find that because they're easy to identify. It's very objective. It's okay, price is just melting here with no pullback. It's super easy to spot on the chart, and then we can just gather 10, 20 examples of that. And from there, we can identify, okay, is there any similarities here? Can we categorize these maybe A, B, C? Is there any real clear overlaps that we can notice? And then from that, we'll reverse engineer our rules. So the process goes gathering the screenshots. From then, we gather the best examples and they become the playbook examples. From our playbook examples, we actually reverse engineer the rules. So we look at, okay, this move happened. What did price do leading up to that? And then from there, okay, cool, we pumped up, we left some space, then we went sideways, then the range actually tightened, etc. So then we'll incorporate that kind of stuff into our rules. Then once we have our rules, we can start gathering data. So before any of this happens, before we're not placing any trades until this point here, first of all, we need to have our screenshots. From that, our playbook examples. Then we derive the rules from, and only then do we start forward testing, back testing, ideally back testing beforehand, and then forward testing. From that initial data, we want to then calculate the expected value. So we have clear rules, we have a setup, we have our playbook, then we can calculate the expected value. Then from then, the process for optimizing is changing one thing at a time, so running one experiment at a time, and then regathering the data and recalculating the expected value. And that's the whole process. But it starts with the playbook, but before that, the precursor to the playbook is the screenshots. So I'm going to show you what I mean by that. So I'm gathering playbook examples on a new setup here. So initially, I just want to go through and find times when the market looks the same. So I'm just looking, gathering all these screenshots when price is set up the same thing. So we can see here, very repeat occurrence. We have a large pump, and I'm looking at when price returned to that pump. What happens when we return to there? All these examples, all the same thing. So we dumped, pump back up to that area. So if we invert that chart, it would be the same thing. This is a dump, then pump, coming back to that area. So that's what we start with, the initial screenshots. From there, then, we want to start getting a little bit detailed. So going in, double clicking on it and thinking, okay, what can I notice from this? Is there anything that I can start to put some rules around or some more specificity? Specificity. So in this example, which I'm just doing right now, I started to notice that, okay, we have our zone here. I call this the origin of the pump. So this is the origin of the pump. We have our zone there. And one thing I noticed was, okay, I'm looking at the EMA crosses. Typically, we seem to be returning to where the EMAs crossed over. So maybe we can notice something about, okay, the supply and demand zone that corresponds or correlates where the EMAs are crossed over. So I noticed that about 1, 2, 3 examples in. And then what I proceeded to notice was, oh my God, this is a repeat phenomenon. This keeps happening. That where we have the zone where price left the origin of the pump, very common for the EMA crosses to also be included in that area. So you can see here again, EMA's cross, this is where price returns to. Interesting. And just going deeper, deeper, keep on double clicking. So if we were to trade this, what would we have to do? Okay, we'd have to cover the imbalance here, and then also the supply and demand zone, which the EMA crosses are contained in. Okay, interesting. And you just keep going a layer and layer deeper. Okay, so what actually happened here? So here was the beginning of the month. We had a pump. This then generates the LQ. So we have another pump here inside the month, and we return to that one. We don't return to the origin. Okay, interesting. So what they do is then they create a low, which then gets taken out. So they generate the liquidity, and then the next month open up and they actually return to the origin with some liquidity to use for that move. So, okay, interesting. Maybe that's a repeat phenomenon. Maybe when the month during the current month, we won't return to the origin. Maybe we'll return in the following month. Who knows? We'll have to see if that's a repeat phenomenon. But just identifying all of these things that can be repeat occurrences, and they're actually giving us information. Cool. And then through this process, I was able to identify, okay, this particular trade here is a B grade. So I've already started mapping out those A through D and putting boundaries around them, putting rules around them. So then I know how to allocate risk going forward. So we can see here, this is a B grade because we didn't have any volume on the area where the crosses are located. So we can see here, this is where the crosses are located. This is the area that we traded from. Here's the crosses, but there's not too much volume here. There's not, like, look at this. This is very different. We have crosses here, lots more volume. So this is B grade because we don't have that volume. Because if we look at all these examples up here, we can repeatedly see the price returns to where there's volume. So volume, not going to jump into it in this video, but it's super important. It's literally a magnet for price because price is always moving to where it has been accepted before. It'll then move away from there and then seek a new fair value. And if it doesn't find that, it will then return. So knowing that, we can then think, okay, oftentimes this reaction happens here. So again, we don't need to go into details, but you can see the process that we go through. We're gathering, we're looking just for the pump origin and price returning to that. Then we go a step further, double click. And that will then eventually enable us to create playbook entries. So I just pull up this playbook entry. It's not actually linked to the this current setup because again, I'm still in the gathering screenshots phase for this one. But once I have my 10, then I can go in, find the best ones and start making actual playbook entries for them. So these are the screenshots. These are actual playbook entries now. So we want to give a brief summary, zoomed out view, close up view. We want to get both perspectives, different time frames. What's price looking like? Okay, I want to see it on the higher time frame and the lower time frame so that I can know. No matter if I'm flicking through the 4-hour chart, the 1-hour chart, the daily chart, a massive thing that would help you is if you can identify your price behaviors on all those time frames. So then from here, answering the important questions, this is where the real money is made then, because we're actually going in, we have a specific thing, we've learned about it more. Now we want to double, triple click and answer the important questions so that when it comes to live time, we're actually executing. We've already answered these questions a million times. So in the heat of the moment, we can make good decisions. So important to always answer what was the optimal trade management. And again, this is hindsight. This is looking back and thinking, if I was to execute this perfectly, how would I have traded it? This is the cherry picking. And you can say, oh yeah, this is just cherry picking, but we have to cherry pick at some point to know what the cherry looks like. So looking at this one, then we can just double down and see, okay, what do we have here? We have a false break, we have a coiled behavior, okay, we have a fractal pump, so we've got a pump and then a pump, so it's the same thing, it's a pattern within a pattern, and then we have another coil here. So just we're kind of added size responsibly. So after we'd broken down and confirmed this thesis, we went sideways. This is where I could scale in and add size. So identifying exactly where we can do that, where would I go to break even, all of these very important questions. What did yesterday do that made this trade viable? So we close and break out at the high of the year. What geometry did the previous session set up? So we had a false break and a coil. There are two market behaviors that, okay, if we close and break out at the high of the year, the high of the month, this is Ethereum, we could replace that for GBP, NZD. If we close and break out at the high of the year, the month, the quarter, and then we get a false break and a coil underneath that, okay, this is the same setup. So in our best setups, we will pump out of the close and breakouts high and fail. That's a repeat thing I've seen. So that's an example. That's the kind of detail that we want to go in. Again, it's quality over quantity with the playbook. Initially, you can go for quantity with the screenshots, and then from there, it'll give you a wider pool to pick from. And then we really want to double, triple click on all those playbook entries. So once you've done that, the next important part is then grading them. So from A++, which will only take a couple times a quarter, a couple times a year, to A, which is our best trade setup, but it recurs regularly, maybe every week. B grade, again, these could happen all the time, maybe every day, but we don't want to be sizing the same as sizing on an A opportunity. And then C, which is just some low-hanging fruit or just a regular layup trade. But we don't want to be risking a full percent, let's say, or full allocation. Forget about percentages. More what we want to allocate will be less than an A grade setup. And then a D, which is one we literally do not want to take. So identifying that will be the most important thing. So build the playbook, and then afterwards go through and really nail that. And we'll cover that more in another video. Nice one, guys. See you.